All right, traders, somebody could give me a mic check, make sure you can hear me and you can see my screen with the lead-in webinar, some of the best setups. Just hit me with a yep. All right, thanks, Richard. Perfect. All right, let's move that. Hey, traders, thanks for joining in for the webinar today. This is my chance every Wednesday to talk about some of the other things outside of my normal training sessions Monday through Thursday. So I use Wednesday to, it's kind of a bonus issue for me uh, to allow me to work some of the things that are really important to me. So today, what we're going to talk about is some of the best first setups. Now, this isn't an all-inclusive list. This is just some of the tools that we've developed in the room to use, but you'll find out you can substitute what I'm showing you with anything else, anything that you may like, and we'll get into that. So let's go ahead and get started. Here's the disclaimer. I'm not a financial advisor, so anything that I show you or say, you should question emphatically and do your own due diligence. And, past performance is not, I can't guarantee future results off of that. So, all right, let's get started here. Focus and specialization. That goes hand in hand with some of the best first setups. What you first have to understand is that frameworks and setups are two separate entities. So inside that umbrella, specialization forces focus. It leads to better research, more confidence, and more consistency. And your real task as a trader is internalizing these setups. That's only half the job, but knowing when to apply them is where specialization begins. And that ties back into understanding that frameworks and setups are two separate things. You combine them, to get the synergy to hopefully improve your performance over the long run. So what's a framework? Well, it's just a broader price segment that gives context to everything happening inside it. There's multiple things you can use for a framework. I'm going to show you some examples today. But again, this is not an exhaustive, all-inclusive list. You may have some things on your own that define the environment for you so that you can plug the setups into it. That's what we're trying to get to. Microstructure. This is where our named setups for us inside the room, our jiggle, reverse mullet, and puncture trade, is where they actually form and play out. So we've taken years to build a scalping program that has setups, shallow pullback jiggle, deep pullback reverse mullet, deepest pullback puncture trade. And we've categorized those. We have statistical profiles, so we know they work in a vacuum, but that's not how we want to utilize them. Going forward, we want to plug in these setups into an environment that says we should be looking for a setup, specific setup. So it's the macro structure, microstructure. Macro structure for us scalpers is, hey, what is the current landscape that we are in right now? And what type of setups should I be looking for? That's the microstructure. And the goal is what I'm trying to get across here is focus, focus, focus. Isolate one concept that synchronizes a setup inside of its framework context. If you're like me, I only need one trade, for my funded accounts. Soon to be, I'm only going to be trading personal accounts, starting probably in July. I only need one trade. One's all I'm looking for. So I don't need to be looking at all the things I'm going to show you to get to my setup. I don't need to be looking at other third-party product vendors' work, other philosophical thing. I have everything I need right here. Okay, you you really don't need an Ivy League education. You don't need to be sitting at the trade desk at Goldman Sachs to be able to isolate a setup, specialize in it, focus. And that's where the magic begins. You can take anything that we have in the room, anything that you may like, as long as you know how to research it, develop statistical profiles, build a money management system around that that makes sense, and know when to plug that in. That's what's important. I always use the example in these things that, I haven't looked at I have half a dozen or so setups for my swing trading program. I haven't looked or even thought about tweaking those. And I don't even know. I can't tell you. I say 6, 7, 8 years, but it's once you have a setup, a mechanism for entry, I mean, why would that ever change? It should. What changes is the framework, how you apply that setup. And that's what I do. So a story, a friend of mine, I showed him how I trade options. And I showed him this one pattern. And I said, this pattern works. Every bottom in the market you see, this pattern is prevalent. But I said, you got to know when to plug this setup in to use it because it doesn't work all the time. Well, he's new to trading. He's like, well, if it doesn't work all the time, what good is it? And I said, well, you don't understand the difference between a mechanism for entry and when to apply it. That's where the trader makes his money. It's not in the setup. That's what we all look for. Everybody is looking, flip-flopping, buying indicators, going to this place here, jumping around. It's the least. Just pick one. You won't be you can't go wrong. There's no wrong decision when you come to an entry mechanism. There's not. As long as you can build a framework around that where you understand it, like we have with the shallow, deep, and deepest pullbacks. They're on the shelf. They're there to use. We use them every day, but I just use mine. I pick and choose whichever one sets up first based on what's emerging from the framework. So hopefully that makes sense. Anyway, my friend, he took, now he has a lot of money. Him and his spouse have a lot of money, but he's a notorious gambler. He started like 23 or $2,500 and in 6 weeks, ran it up to over 56,000. So he thought he had found the goose that laid the golden egg, and he told me what he was doing, and I'm like, hey, good luck to you. I said, you're violating every principle that I told you about. Yeah, and of course, like 3 weeks later, he was completely broke, busted, blew out in that account. But he was using that setup tool or the entry mechanism, which was working, and he was betting everything he had. And he had it only took him 6 trades to get from 2,300 to like $56,000. And then he lost it in 2 trades, everything. So you got to know when to use these tools. So at the bottom of the screen here, making the very subtle shift from focusing on the setup to you stating that I am taking this setup because of, you fill in the blank, because of a trend line break, because of a triple focus divergence setup, because of I bounced off of a key level today. You pick the reason. New York Stock Exchange tick index just hit negative 1,000. So you've got to have the reason to take the trade. The reason is you're waiting for the environment to pitch this to you, give it to you on a silver platter, and then let it go through its gyrations to tell you when to look for your setup. And it can start making a big difference in your trading. It certainly has for me in scalping. All right, so what we're going to talk about here is I'm just going to show you some examples very quickly. Top bottom picker signals, trendline breaks, divergence from extremes, something here on the bull bear mode, and then a bonus. The intent is not to master all these, but just to show you that you can just pick one of these, specialize in it, and it's all you need. I mean, honestly, if you're a specialist in one specific thing, I mean, you don't need, like I said, you don't need the head trader at Goldman Sachs to tell you that's a good or a bad thing. I mean, you already know. I mean, he doesn't know any more than you do. They just have access to information we don't have access to. So anyway, this is what we're going to do. Let's go ahead and take a look at some examples. Just a second here to grab my charts. So I'm going to start off with a very simple top and bottom picker. I'm not going to talk about entry mechanisms at all for this right here. I'm just going to simply just show you what the concept is. The concept of waiting for the first uh, signal. So what we have here is we have our center line method. I have a 54 tick range bar chart. I'm going to show you this concept works on every aggregation period that you can imagine. So it doesn't matter what you look, what type of chart you put up, it works. So again, it's just up to you to decide, draw the line in the sand like, oh yeah, this is going to be, I can do this. And then don't look at anything else. I mean, honestly, does it matter if Ninjaco comes out with a new, super dynamo? No, it doesn't. If you specialize in this, nobody's going to be able to, hold a candle to you. So just take a look at this. We get a crossover, red on red, and we have a top picker. So the top pickers are in magenta and the bottom picker signals are in green. Now we only want to look in a bearish mode to see when we get the first top picker. The concept is first top picker in a bearish mode, first bottom picker in a bullish mode, and just take it, make your play, and hold out. I mean, could you get a 1-to-1 on this trade? Yeah, probably, unless you're putting a stop loss, one tick above that high right there, which is insane. But anyway, I'm not going to talk about that. I'm just going to show you the concept. Let's go back and look at, the bull runs as they apply. So here we go, big bull run up, green on green, pull back, bottom picker signal right there. So you get to pick how you enter. You can just go through these, crossover, green on green, bottom picker, there you go. Tack point, you decide how you want to enter, okay? That's the concept. Now we can go over here to, this is a 1-minute chart. Same thing, center line method. We get green on green, first bottom picker right there, tack point, and you've got this to play with right here, depending on what your trade plan is. So again, this is 1-minute charts. 1 minute green on green entry right here. You're like, well, that doesn't look like very much. Yeah, that's 40, 60. It's like 60 handles right there. So I don't know, maybe you could take 20 points out of 60. That's kind of what we're dealing with. So, all right, red on red, top picker right there. Tack point, you figured out how you want to skin it. Again, you don't need to look at anything else. This is it. It repeats over and over. Every chart aggregation period you look at, it's the same thing. It never changes. Concept again here. Here we go. Red on red, top picker right there. Could you make any money with that? Maybe. Anything can happen in trading. Here's a beautiful one. Green on green. We're above right there. Bottom picker. That one doesn't count. It's red. So you have the green right there. So again, it's right here. This is a 333 tick chart. It's the same thing. Green on green, pull back, bottom picker. That's it. So the concept works. You've got an environment and a setup, or the framework is built for you. You just need an entry mechanism to plug into this to get you into these kinds of trades. And the entry mechanism should be something that you just go to automatically every single time. Your entry mechanism should be mechanical. Your entry mechanism could just be something simple as, yeah, I'll put a stochastics on this, and when the stochastics and I get a red and I'm in here, I'm just gonna sell it at the market. Okay, that's an entry technique. That's something you need to repeat time and time again so you have it. But we're not going to get into entry techniques here. We're just going to talk about the concept. And the concept for the top and bottom picker is it is not any more complicated than this. I've used this for almost 15 years inside of my swing trading program. And I've shown many times, how I use this, for my intraday stocks. But it's very simple, very clean, and yeah, the only thing wrong with this is we tend to try to complicate it and add more stuff, more confirmations, more this, more that, 42 different lines to check against it, and it dilutes but I mean, look, boom, bottom picker. There you go. So, okay, so that's one use case for, for an environment. Okay, another is you've seen me in the room here. I use trend lines. Let's get to a trend line. I got to tell you today, if you're new to the room, today has been a really, really tough day in the market. If you're green and you're trading, hey, good on you. But what I typically try to do, I just draw my own trend lines. And, just as an example, I'll draw this. And then what I'm doing, let's open this up here. And so when I draw the trend line, I'm just going to show you what I'm doing. This is how I define my environment one way. I'm looking for a trend line break. I'm not interested in any of this stuff here. I'm looking for the break, the pullback, or the break above, and then I'm looking for the first A plus setup. It's right there. It's that jiggle. So that's what I'm looking for, and that's it. So you miss that. I just keep drawing trend lines. We get this little trend line right here. Now my trend lines are very subjective. That's why I don't, really go into great detail. They're just very subjective. But here we have a reverse mullet right there, bearish trade after that trend line break. I would have had this one right in here. But a reverse mullet, that's what I'm looking for. Okay, I just wait for the environment, for the framework to present me with an opportunity, and then I try to plug my setups in. So I'm looking for the first setup in our archive, whether it's a reverse mullet, whether it's a jiggle, whether it's a puncture trade. I already have the setups figured out. All right, so that is another example. Man, what is that? Microsoft trying to infiltrate again. All right, we had a lot of good divergence trades today. We're like 2 for 2, and I think I missed one or two. This is one of the highest probability trades that we have, only by a couple of, a very thin margin. All right, so right here is the divergence, and then we just look for the first A plus setup after the divergence. That's all we're doing. Get back over here, and you can see we actually took that trade this morning. It was a jiggle right there. So worked out nice. We're in a good trade to hold. I'm only trading one contract over here in the demo account. So there's plenty of opportunities if you're trading multiples to try to hang on to some runners in here. But anyway, that's another framework trade that we use. Let's see. I know we had another one this morning. I missed this one. This was a divergence right there, that jiggle. I think I took one more this morning. Yeah, that was it right there. So the first, here was the other divergence, lower high, higher high. And I use our triple focus tool. That is in the bottom panel here. And Richard has this coded up for us so that we see the extremes, they pop out. And also, I don't have this one set up, but it also has labels on it. So there we go. I should have, let me let me change that so those things are, well, I'm just going to leave them on there right now. I can change this to where the lines aren't extended, but you'll see we have numerical values up here, so you don't have to eyeball the heights. So anyway, this is another framework tool that I use in order to get my one trade in my funded accounts. Okay, so this is kind of the bonus that I wanted to show you. This is something you can use immediately. All right, so we have the triple focus divergence tool here. This is in bull bear mode. I have the settings to where it colors the background whenever the oscillator drops below the zone or gets above the zone. The minute it gets below the zone, it's -1 until it gets back above the zone, then it's +1. So it just stays red that whole time. So what I want to show you is that if you plot just the standard stochastics straight out of the off the shelf, no changes, just plot the D, make the K transparent. Today has probably been the worst day I've seen in weeks looking at this, but first trade right there. You're only looking at the first trade, not trying to trade 42 stochastics bumps in this strategy right there. First trade in the green zone. There's probably a faster way to do this, but anyway, you get the point. First trade in the green zone. First trade in the red zone. So you can just go back and just take a look at those. For those of you that are in the room that have the triple focus, just plot the stochastics. No changes to the settings, default. Again, I'm not curve fitting anything, just showing you how you can use some simple tools to start specializing and focusing. Make your play, build your money management so that if your trade plan says I'm taking 3 trades today, I have a plan for some runners. Maybe you get one really big trade off the get-go. Who knows? Then you're done. Maybe you try 3 times today and you only get first take profit. Yeah, so what? But this is a way to specialize right here. First setup in the green zone. First setup in the green zone. Then you can apply the entry techniques for that. So our entry techniques tell us the jiggle, the reverse mullet, and the puncture trade on how to enter what our where our take profits should be along the chain, and then where we should leave runners. So this is one of the things I wanted to show everybody in the room. This is especially if you already have access to the triple focus. This is a very easy thing to plot and to specialize in. And what else, what more do you need other than something like this? to try to get very, very good and consistent at trading. I I mean, I don't know. I've been doing this for 40 some years, and the most simple things work really, really well. And again, your entry techniques, you you should be working on once you get your setups, your entry mechanisms where they make sense to you. Yeah, you just like I am now, they're on our jiggle, reverse mullet, puncture trade are on the shelf. Not going to deal with that probably ever again. But we're going to work on this to try to provide traders with some different concepts on how to define the environment. This is a great way to do it, combined with the stochastics that sets you up. Now just look for one of our setups. So that is a very, very clean and effective way to do that. Let me see here. Not it. Not it. Give me just a second, trying to find something. Hmm. Okay, I thought I had it up here for you, but oh yeah, there it is. It's nope, that's not it either. Anyway, this is very easy to program to set up and definitely in Markers Plus, probably pretty easy in Predator X, but something very simple like this right here. And you don't need much more than that. I know we have a tendency to just continue to look and try to find something better, but and this is pretty good right here. And then again, this is just one way to use the triple focus. So let's go back. All right. So if you're new to the room or new to the webinar, you're not part of the room or anything. For the month of June, what we're doing is if you come on board and join, the monthly subscription, you're going to get everything that we have. We have like 13 total indicators, which includes the flagship model, the triple focus, all the stuff we've built in the room, access to the live trading room. Anybody that's a subscriber, as long as you're a subscriber, you get all the new stuff we're building and any upgrades. I'm telling you, we are building a lot of neat stuff in the background. I showed this morning in the room. Subscribers will have access to this in about a week, in about a month, sometime in July. These are all of our timing windows. So far in 11 days, we've had 572 framework triggers where we have, these trade setups that we have activated inside of these frameworks. And again, they've done very well. So, I showed this morning that our triple focus in 11 days, 62 trades, about an 89% win rate. But, the jiggle is far doing much better than anything else in that for that setup there. So this is pretty neat. It's going to be all interactive. There's a lot more features going to be built in with this to try to help you understand that this tool right here is to try to help you understand that the importance of separating setups from your framework. Again, you got to go back and make that subtle shift. The reason I'm taking this jiggle setup is simply because I've had a trend line break. I've got a triple focus divergence. I've got blah, blah, blah. I just had a bounce off of an intraday key support level. Whatever your framework is, that's what this is designed to do, to let you see that hey, it does actually improve the performance. And again, this is all theoretical. It's that's all it is, but it's just to show you that this is a viable path. So we've got all kinds of stuff. The timing windows will be built out for subscribers, probably be available in July and August. So, but we got PDFs, training videos for everything that we have, statistical roll-ups every week, training sessions 4 or 5 times a week. And you can lock the rate in, cancel anytime to start in July. To get into you can always get into the room for this price, but to trade with our stuff, you're going to have to, starting in July, you have to purchase everything separately. So I think $100 for everything that we've built, that we have, the quality of it. Yeah, I don't think there's anything out there that comes close to that. So anyway, that's what's coming up. And this is how you can get in touch with us. If you want to drop me a line, most of my, you can join at patreon.com. That's A+ setup. That's where you can join at. But listen, I'd like to thank you for dropping into the webinar. Hopefully it's helpful. Again, the key takeaway is focus, focus, focus. Start trying to specialize. Understand the difference between setups and frameworks, and get to a point where you're just looking at one type of concept for your scalping program. Thanks again. Good luck in your trading. Hope to see you in the room. Have a good one.